Today is the day you've all been waiting for, a discussion of 2026 tax law changes that will help homeowners, buyers, and sellers going forward. What's that? ChatGPT is telling me that people would rather have their teeth extracted than file taxes? Okay, I get it. But this year, there's one major change and a few smaller changes that could make filing more like getting a cavity filled than full extraction. I don't know, maybe. Anyway, the most important change for Californians this year is an increase to what's called the SALT deduction cap. SALT stands for state and local taxes, which includes property taxes and state income taxes. For many California homeowners, especially in Orange County, the previous cap of $10,000 meant a chunk of their taxes weren't deductible at the federal level. A higher cap doesn't mean everyone will get a windfall, but it does mean homeowners can deduct up to $40,000. Experts estimate that amount would cover almost everyone in California if you itemize. Now, in the past, a significant portion in California, especially Orange County, weren't able to itemize all of their property taxes. The SALT deduction was effective in 2025 and going forward for all homeowners. A less publicized deduction for private mortgage insurance, or PMI, will start this year in 2026. PMI is a monthly cost for buyers putting less than 20% down on the property, and previously it wasn't deductible. The PMI deduction would reduce costs for home buyers with smaller down payments, which could only help the market, I think. This year, Congress also made the mortgage interest deduction limit of $750,000 permanent. It was set to expire at the end of last year, so making it permanent just means it's a little bit more predictable out there for homeowners and buyers. Lastly, one seemingly negative change for this year is that you can no longer get a federal tax credit for energy-related items like solar panels or energy-efficient doors or windows. We say this is seemingly negative because this could be a good thing for homeowners with existing solar panels. Their homes could be more valuable than their neighbors going forward, since putting in solar now will be that much more costly. Keep in mind, we're real estate pros, not CPAs or tax attorneys, so talk with your tax pro before acting on anything we've discussed here. They might not be nearly as exciting as the real estate agent, but they'll have the best tax advice for your particular circumstances.